We are ready, Madam Mayor.
Perfect. We will bring the special assembly meeting to order for November 30th. Ms. Gladys, would you do the line acknowledgement, please?
Thank you, Madam Mayor. We would like to acknowledge that the city and borough of Juneau is on Tlingit land and wish to honor the indigenous people of this land. For more than 10,000 years, Alaska Native people have been and continue to be integral to the well-being of our community. We're grateful to be in this place, part of this community, and to honor the culture, traditions, and resilience of the Tlingit people.
Thank you, Ms. Gladys. Madam Clerk, will you call roll?
Thank you, Madam Mayor. Walla Kida,
Here.
Ms. Treem,
Here.
Mr. Bryson,
Present.
Ms. Hale,
Here.
Ms. Hughes Scandies,
Here.
Ms. Wall and Mr. Smith are absent. Ms. Gladys
Here.
and Mayor Weldon.
Here.
A quorum is present.
Thank you, Madam Clerk, and we will move right in. Turn on my mic now. Item 2, Madam Clerk.
Thank you, Madam Mayor. This is public hearing for ordinance 2022-61, an ordinance amending the sales tax code regarding small business sales tax filing.
Thank you, Madam Clerk. Mr. Manager.
This ordinance would allow businesses that have less than 20,000 in gross sales per year the ability to file sales tax returns annually instead of quarterly. If a business opts into the annual filing option, the business will be required to file quarterly returns if gross annual sales exceed 20,000. Assembly Finance Committee reviewed this topic on November 2nd, 2022. I recommend you adopt this ordinance.
Thank you, Mr. Manager. Is there any member of the public that wishes to speak to this ordinance? Seeing none, we'll bring it to the assembly. Mr. Bryson.
Thank you, Madam Mayor. I move the assembly adopt ordinance 2022-61, amending the sales tax code regarding small business tax filing, and ask for unanimous consent.
Any objection? Seeing none, that ordinance passes. Item 3, Madam Clerk.
Thank you, Madam Mayor. And just a note for anyone watching, we do have Ms. Treem on Zoom. It's just her video is off, but she is listening and participating. Thank you. This is public hearing on ordinance 2022-06, version BW, an ordinance appropriating $3,984,400 to the manager for the city and borough of Juneau's fiscal year 2023 employee negotiated wage and health increases, funding provided by various sources.
Thank you, Madam Clerk. Mr. Manager.
This ordinance would appropriate $3,984,400 for CBJ's fiscal year 2023 employee negotiated wage and health increases for the Marine Engineers Beneficial Associations, Public Safety Employees Association, IAFF, and unrepresented employees. This appropriation funds a 5.5% wage increase for all employees in fiscal year 2023 and a 5% increase to the employer health contribution. Additionally, this ordinance appropriates authority for a 15% increase to attorney salaries and compensation increases for the city manager and city attorney as approved by the assembly during the September 12, 2022 regular assembly meeting. Assembly ratified the MEBA and PSEA negotiated labor contracts during the regular assembly meeting on July 11, 2022. Assembly ratified the IAFF negotiated labor contract during the November 21, 2022 regular assembly meeting. I recommend you adopt this ordinance.
Thank you, Mr. Manager. Is there any member of the public that wishes to speak to this ordinance? Seeing none, we'll bring it to the assembly. Ms. Hughes Candies.
Thank you, Madam Mayor. I move that the Assembly adopt ordinance 2022-06 version B W, and I ask for unanimous consent.
Any objection? Seeing none, that ordinance passes. Item 4, Madam Clerk.
Thank you, Madam Mayor. This is public hearing for ordinance 2022-06, version BX. An ordinance appropriating $116,400 to the manager as funding for Eagle Crest fiscal year 2023 pay plan adjustment. Funding provided by Eagle Crest Revenue.
Thank you, Madam Clerk. Mr. Manager.
This ordinance would appropriate $116,400 for Eagle Crest's FY 23 pay plan adjustment. Pay plan adjustment increases employee wages by 7%. This adjustment follows 2 previous pay plan increases Eagle Crest implemented in calendar year 2022 in an effort to increase employee wages over minimum wage and align pay with ski industry standards. Most recent pay adjustment approved by the Eagle Crest Board on September 15, 2022 is intended to promote employee recruitment and retention. This appropriation also provides for sign-on and returning employee bonuses for seasonal employees. Funding for this ordinance is provided by Eagle Crest Revenue. I recommend you adopt this ordinance.
Thank you, Mr. Manager. Is there any member of the public that wishes to speak to this ordinance? Seeing none, we do have Mr. Scanlon on Zoom also if we need him for any questions. We'll bring it back to the assembly. Ms. Hale.
Thank you, Madam Mayor. I move ordinance 2022-06 BX related to appropriation of $116,400 for Eagle Crest pay plan, and I ask for unanimous consent.
Thank you, Ms. Hale. Any objection? Seeing none, that ordinance passes. So this concludes our special assembly meeting and we will go straight into finance. As soon as the clerks tell me.
We'll live.
You're going to enlarge the graphs on the screen. Just let us know when you're ready. All right, we will call to order the Assembly Finance Committee for November 30th. Madam Clerk, which I'm just going to call you Ms. Spiegel. Would you note the roll, and Ms. Wall and Mr. Smith are not with us, and Ms. Treem and Walgdock are on Zoom. Agenda topics, General School District Audit. Oh, excuse me, approval of minutes. Is there any changes or additions to the minutes of November 2nd? Seeing none. Those minutes are approved. Now to agenda topics, general school district audit, Mr. Rogers.
Thank you, Madam
Madam-
Mayor.
Madam Mayor,
Yes, Ms. Treem.
were we still going to switch our two topics, or did you make a different decision?
We conferred and we decided to continue with what we had. So, because we aren't anticipating Ms. Tarver being here for a long time.
Okay, thank you, Madam Mayor. So tonight I'll introduce Karen Tarver, our auditor with LG Rayfeld. You're welcome to join us at the table here. As we see every year when Ms. Tarver is with us, your auditor works for you. They don't work for me. They're here to make sure that we're doing the right things by the city financially. We do use LG Rayfeld as their auditor for CBJ, the school district, and Bartlett. Those three organizations get three separate but interrelated audits. I would note that we will have Ms. Tarver back along with her colleagues for a full presentation of the CBJ school district and Bartlett audits on our normal calendar, which will probably be either the meeting in January or February, depending on timing. So don't necessarily think tonight that we have to answer all of our questions about the school district audit. Ms. Tarver will be back with us. And I think tonight, because it has received a certain amount of attention from the media and the public, we wanted to give Ms. Tarver an opportunity to sort of cover highlights and high points of the JSD school district audit and give the assembly an opportunity to ask at least preliminary questions, knowing that Ms. Tarver will be back in front of us in a month or two. So I think with that, I would pass it along, Ms. Tarver.
All right, thank you for that. And Ms. Tarver, if you would.
Thank you. I promised not to get into the details. So if I start getting details, help me get back at a high level. Reading financial statements is sometimes a challenge for non-accountants. And so at the school board meeting presentation, we spent a lot of time going through their financials and helping clarify questions. And so what I've found since then is that there's other people that have questions as well. And so during the school district audit this year, we had two what's called significant deficiencies. And so those are control weaknesses that can result in either possible material not misstatement or a compliance finding. And the one that I'm here to discuss with you tonight is the one related to compliance with CBJ Charter Article 13, Section 7, which is specifically related to budget controls. And I believe Mr. Rogers handed out a couple pages of the financial statements, and this is the the balance sheet and the statement of revenues and expenditures and changes of fund balance. And this is just the governmental funds of the school district, which is the majority of their funds. And what the finding related to is the fact that the school district, while they didn't overspend the budgeted expenditure total, they have overspent available resources. So they overspent, their revenues came in less than expected. And so they continued to spend at the budgeted level, which resulted in a loss, which at this point for fiscal year 22 resulted in using all available fund balance into the point of going over available fund balance and creating an overall deficit for the school district. And so on page 9, which is the income statement or the statement of revenue expenditures and changes fund balance, the number that you're really looking at is that bottom line, the very bottom line. And again, this is presented with the major funds of the school district, and then the totals in the FY22 column show a overall $63,000 deficit. But what I'd like to make sure you understand, while that might not sound a lot with the overall budget size, that if you on page 7, and it's the third line up, and it's the unassigned portion of fund balance, you go to the 2022 column, And you'll see actually that the unassigned deficit balance for the whole school district is actually 3.1 million. So fund balance is made up of different components, and while it nets down to that 63,000, I don't want to, I guess, just focus on that 63 because it's really the 3.1 is the overall deficit that needs to be addressed over essentially future FY 23, which we're in budget adjustments as possible. And then, you know, with a deficit that large, it's going to probably take actually several budget cycles to address the deficit. And
Ms.
This-
Carver, could you wait one? Ms.
This is
Glasewski?
great while we're up here because you lost me already.
okay,
Especially from the memo, it talks about 600,000 something. And now you're talking about 63,000 and 3.2 million. So could you do that again?
I
or
will.
In a different way?
yes.
Or I get the part about, so something revenues didn't come in, some kind of revenue, we don't know, or you might know, but I don't know which one of these didn't come in. But they continue to spend, and that is the 63,000.
So
Anyway, I'm trying to, you go
Yep.
ahead and try.
nope, I will, so I'm gonna kind of walk back through a little bit and I'll add some other facts to it. So the operating fund, which is the right or the left-hand column on both sheets, is really just like it says, it's the operating fund of the school district. And so that includes essentially the general operations of the school district. It includes the borough appropriation money. I'm looking on page 9, the left-hand column, operating fund. And so this really is a picture of the funding coming in and then the expenditures. And if you work your way down that, you'll see that you had a net, the third line up, the net change in fund balance is a minus 2.6 million. So expenditures exceeded revenues by 2.6 million. And then the next line down is what fund balance that was available at the beginning of the year. And that was 2 million. And so that's why the operating fund basically has a 620,000 deficit. So the reason that specifically was kind of noticed or described in the finding narrative is because the operating fund, it really is the true fund that the board and school district management have budgetary control over. The other funds, a lot of times have other funding. So a grant, for example, you're only going to spend up to that grant funding. You're not going to have budgetary latitude as far as what you can spend if you just have a grant that you're spending. I'll work my way going across. Oh, yes.
Apologize, I didn't see you, Mr. Bryson. Have to wave your hand more.
No, that's okay. Do you mind if I ask a question?
Go ahead.
All right. So I'm gonna ask about year 2021. I'm on page 9, far right column. It says the excess deficiency of revenues, 3,330,000. So it looks like when they finish school year 21 or fiscal year 20, is it school year 21 or fiscal? Okay, it is school year. So when they finish that, they had a $3 million overage the year before. I don't recall us having that part of the discussion. Okay, so they were $3 million over in 21, 2.7 over in 22. So those, why are those not the real numbers that we're looking at?
It's
As-
a very good number to look at.
Okay,
But what happened in 21 that's different than 22 is that beginning fund balance number for fiscal year 21, you had available 5.9 million, right? So that's the fund balance really is your cushion, right? That if you go over under spending, it either adds or subtracts from your fund balance. So in 21, the school district lost 3.3 million. It reduced fund balance down to that 2.6. And so if you actually had multiple years to go back, you'll see that this trend started in about fiscal year 18. And over the course of since then, there's been essentially spending in excess of revenues. And again, it's hard sometimes to understand that it's not that the spending was over budget, but it's either that revenues didn't come in as anticipated, but spending stayed at the level that was budgeted, and therefore then or that actually within the budget, it was approved use of fund balance. So even within the budget, in order to balance it, you budget that you're going to use part of your fund balance to balance your budget, but it's obviously not sustainable. And school district board and management had discussed that over the years, that it wasn't a sustainable practice to continue to use fund balance. And so finally this year got to the point where, you know, there just is no more fund balance to use.
Follow up, Madam Mayor.
Go ahead.
What is the standard? Like, we have a rule that we have restricted budget reserve, 2 months worth of operating budget. What is the budget reserve standard for a school district with a budget of this size? How much of a cushion, and what was their peak fund balance in 2018 when they started pulling from it?
2018, I would have to double check.
I was gonna say, let's
Oh.
stay with what's happening today, but answer the other
I know.
question.
The peak-
That one I would have to
Thank you.
double check, but all their audited financials are on their website, and you can look them up. And I also believe that management did a summary for the school board that should be available. And then your second question, as far as how much fund balance should they have similar to CBJ, a board policy regarding specifically the operating fund balance, and it had a cushion built into it. And the board through the budgetary process had waived following that policy.
Thank you.
Okay, just a comment. Remember, they had to go through COVID too for a couple of years, so their finances were a bit of a mess till they got funds from elsewhere. Ms. Hale, did you have a question, or are you just moving? Okay, Ms. Tarvik.
So I guess I wanted to make sure that I'd addressed kind of where that 600,000 was coming in, but I'll just kind of briefly go through. So as you can see, the next column over student transportation has a deficit of 800,000. That's a program that is state funded essentially. And unfortunately, the state funding has for several years been under actual costs. And so that's the accumulated losses that have occurred in that fund. Food service, while this year ended with a positive fund balance, has operated for several years with a deficit as well. And unfortunately, the cost associated with food service often exceed available revenue from the state for that program. The ESSER is grant funding, so you can see revenues equal expenses, so there's no impact on fund balance for that. School activities is a positive fund balance. That is all the different student group funds essentially at the different schools, and so not available for general operating costs of the school district. And then the column called non-major governmental funds, that is essentially the collective of all the other funds, which are primarily grant funded. You'll notice that revenues equal very close to expenditures. And while here it shows the 67,000 deficit, if you'll go over to page 7, and you'll look at that column for your non-major governmental funds, and you look at the fund balance section, which is the bottom section, you can see that the unassigned portion of that fund balance is actually 591,000. And that's primarily the community schools special revenue fund, as well as the Raleigh special revenue fund. Both have deficits in those. And then the other fund balances, which are positive within that fund or within the collective total for those funds, are restricted in purpose. So again, the reason it's only 67,000 is because the positives are netting to the negative. And again, the positive portion of that fund balance is not available for general operating costs that are budgeted within the operating fund.
Ms. Tarver, we have another question.
Just a
Flash
quick
FC.
question. I'm looking at the revenue source. Are all of our borough appropriations in that one line to the cap and above the cap, or is other something? Or
Good question. So page 9, the top line, your borough appropriation there you go, got it out, is, so the amount that's capped, the amount in your operating fund. So that is the amount that you can't go over, or it will influence the foundation funding. And then the other amounts in student transportation, food service, and the other funds, those are the ones that are considered outside the cap. And so the total showing as 2022, the 29 million is the total borough appropriation to the school district. Okay, thanks.
Thank you. And Ms. Treem has a question too.
Thanks, Madam Mayor. I just can't see this document very well. Can you scroll up or make it smaller so I can see the columns that you're talking about?
And I feel like I've dove into the weeds. So to come back to a high level, I wanted,
Before you come
Oh,
back,
yes.
Ms. Hughes Candy.
Just one more moment in the weeds, because this is really helping me interpret this. So to clarify, the student, if I'm looking at the top line of the borough appropriation, if I take what's in student transportation and food service and non-major governmental funds, that would be all the above outside the cap money. Okay,
That's correct.
thanks.
and I'm happy to continue to answer questions. A lot of it is just interpreting these financial statements and making sure you understand kind of the numbers. So I kind of have to walk you through those details. And so part of the question, I think, is, what's the next step? And obviously there's a huge financial challenge to the school district board and management. Immediately, they will need to be looking at their FY23 results, budget to actuals, and figuring out if there is any cost savings they can build into this year before this fiscal year is done. And with that goal of being to at least bring the overall deficit into a positive situation, but specifically also in the operating fund. The operating fund budget has to be submitted to Alaska Department of Education and approved, and it has to be a balanced budget. And so the fact that they will be starting out their next fiscal year with a beginning deficit will force them into a situation of balancing their budget, which means cost savings or cost cuts rather, to create a balanced budget. And they have no fund balance to absorb any unforeseen things that are going to come up in the next few years.
Ms. Tarver, another question, Ms. Glasgow.
Just trying to get back to the overall point, which number should be most concerned about? The 63,000, the 620,000, the 3.2 million. So that you suggested that that's a concerning number. Could you tell me again why that is?
Ms. Tarver.
I think that's the $1 million question. Everyone wants to know which number is important. And I guess I would say they're all important. Overall, the school district, that 63 million, or 63,000, excuse me, 63,000 is the overall deficit. That needs to be rectified. You should never have an overall deficit. Essentially, they've borrowed funds from the city is really what they've done at this point, and they've overspent their available resources. So that has to be corrected. The operating fund, which is the 602,000 deficit, it's again a netted. So I'm looking at page 7. Again, the fund balance amounts at the bottom, and I'm just going to kind of walk through those again to answer your question, is that in those fund balance amounts, you have components that are positive as well as negative. And so as you spend during the year, you may be using some of those committed or restricted or the non-spendable, which is your inventory and prepaids. Those may be used up during the year. But if you look at the unassigned amount, and that's really the amount that's available to budget, if it was a positive amount, you are 1.8 million in the hole. And so if you think about that net amount, that 620,000 is that they need to be able to budget. If they're going to take care of that deficit, they need to be able to have at least a $620,000 increase basically to fund balance by the end of this year to get rid of that deficit.
Okay, if I'm following you, that means that if I'm on the school board, I should, just to be even at the end of the year, I need to find $600,000 of reductions in some way before whatever the July 1st.
Right.
that
I mean,
correct?
you either need more money or less spending or a combination to get to that point.
Okay.
And because there are all the different funds that impact the total, that's why they're all equally important, because even if maybe you focus on the operating fund and you get the operating fund taken care of, if student transportation or food service or some of these other funds continue to operate in a deficit situation, when they're all netted together, you could still end up with an overall deficit.
Ms. Hale.
Thank you. Thank you, Ms. Tarver. This is helpful, and it's hard for me to kind of work through this. So if what the school board has to do is come up with 620,000, my understanding from looking at the page 9 was that 27 million, that was the funding to the cap up at the upper left corner. But is part of this deficit in the cap, or is part of it outside the cap? And I'm not saying that the assembly is going to swoop in and save the school district with 620,000, but if the assembly could, so the question is, could the assembly help with any of it?
It's in the operating fund.
Ms. Tarver, are you
You're not-
happy with that, or do you want us to
I
go
would
to?
let Mr. Rogers.
Yeah,
address
Mr.
that
Rogers.
one.
Thank you, Madam Mayor. I mean, I think the short answer is no. I mean, the assembly cannot appropriate money to the school district in excess of the cap for operations, meaning the educational function of the school district. There's no easy way out of this. I mean, state law and the foundation formula cap the amount of money that a local community can contribute to the education function, and CBJ contributes to the cap, and you contributed to the cap in 22 and 23. So there is nothing that there's no way for the assembly to appropriate $620,000 of funds, even if that was a desire.
Thank you.
Anything further? Go ahead, Ms. Tarver. Oh, wait, we have a question from Ms. Stream.
Thank you, Madam Mayor. I don't know if this is the appropriate time to ask this question, but it's based off of Ms. Hale's question. What can we, or what can the school board do going forward, since it seems like this has been a structural problem in that they've taken from their fund balance for at least a few years, and certainly COVID happened and that made a big impact. But you know, they can't sell more widgets to make more revenue. We're really restricted by state law on our revenue. So what can they do? What can we do moving forward? Do we have options here?
Mr.
Or is
Rogers,
this
I'm gonna go to you for that one.
Yeah, I'll muse on this just a little bit. I mean, as Ms. Tarver said, you either have to cut expenditures or you have to raise revenue. So the school district cannot raise revenue from you, but it can obtain grants, right? So the school district does have the opportunity to grant seek. That is not limited by the cap. It could offset some of their expenditures in the current year. Additionally, the school district can cut costs. I mean, and one of the things that I speculate the school district is presently wrestling with is that, just like CBJ, the school district has a very large number of vacancies. So the amount of payroll that they will have budgeted for is not the amount of payroll they'll have. And so it'll be a balancing exercise for them to figure out how to manage current year expenditures in such a way that they, I mean, I don't mean to underestimate or incorrectly state how big the challenge is. I mean, they've got a big gap to close. And they'll only be able to do it through revenue that they seek from third-party sources, meaning not local government, basically state and federal grants, or the reduction of expenditures in the current year. There's really no way out of this wicket except for those two.
follow-up?
Go ahead, Ms. Dream.
So the other sources, like if they do get grant funding, they can use that for operating funds. Is the only restriction on operating funds what comes from us?
Yeah, so that's a good question. I think importantly, the restriction on spending the grant funds will be based on the grant, right? But if they get grant funds that are restricted to something that they were already going to spend operating funds on, it would have a net benefit on their operating budget. So there's no grant funds come into the operating fund and get spent just like any other funds, but the school district under normal circumstance, when it seeks a grant, it is often seeking a grant for something it's not already doing. So the only grants that would help offset the problem are grants that pay for things that they already have budgeted to do.
Sorry, can I rephrase that?
Certainly.
There's a incredibly complicated formula in state law about the cap, but that cap is not on the school district's actual operating fund. It's just on what the local government can contribute. Is that what I'm understanding? So there's not a limit out there that you could find by formula in their operating fund. It's just the limit's on us. Does that make sense?
Yes, that's correct. So
Okay.
the cap is not impacted by state and federal sources. So grants float above the cap. The cap does exist on how much local contribution a municipality can give to the school district, but and Ms. Tarver may be able to correct me, but my understanding is you could actually give more if you wanted. It would just reduce what they get from the state. So we fund up to the cap and not more, because any more would simply reduce the amount of money we get from the state, which doesn't help anybody. So the cap is really on the combination of the state foundation formula plus local contribution. But state and federal grants are not subject to the cap.
Ms. Gladysevsky.
So if I was trying to first understand the numbers, if we're good with that, could I ask a question about your condition and causes and that part?
Absolutely.
Okay, so at least I understand the number, I think. And these words in the cause section are alarming. Did not include a reconciliation to the budget, et cetera, all those things. So have those things been corrected for the future? I know this is a looking back audit, but I assume whatever was happening is still happening unless they fixed it. And so in the future, what's happening? In the future, what's happening? How do you like that
Ms.
question?
Tarver, Ms.
How do you like
Tarver?
that question?
I wish I was a fortune teller. I would tell you for sure, but we identified these issues as part of our audit. Our audit report was just released and presented in September, October timeframe. So management and the school board are aware of it. They're working on it. At the back of this is their corrective action plan. Back of the whole audited financials. I don't believe it's part of your packet tonight. And they put in their projected correction action plan to be resolved by the end of fiscal year 23, I believe was their timing. The current fiscal year, June 30, 23.
Ms. Hale.
Thank you, Madam Mayor. Is there, and this is in part a question from Ms. Tarver, but also for Mr. Rogers, is there any kind of oversight or assistance that CBJ, not the school district, or the auditing firm, for example, can provide or is planning to provide on an ongoing basis rather than us just sitting here and waiting for the end of FY23?
Who's going to tackle that one? Mr. Watt, they're all looking at you. Or Ms. Tarver, did you have anything to say?
I guess I'll just comment that Juneau School District is not alone in facing these problems. If you've read recent articles about the Anchorage School District, that they're facing a budget deficit equal to the whole school district's budget here in Juneau. So they had to hire a consultant who came in and looked at their school facilities, and they're shutting down, I believe, 3 to 6 of and consolidated operations in order to cut down personnel costs. And so a lot of the districts around the state are dealing with this. There's a lot of push from school districts on the legislature to increase the foundation funding, the by pupil amount. So I know that doesn't address exactly your question. We currently, our firm is not working with the district on this. They haven't approached us about any assistance. And then I'm not sure if they've approached finance at CBJ or not.
Mr. Watt?
Thank you, Mayor. So I mean, I think the short of it is there's not much we can do to help them. The district maintains their own financial system. The district they're aware of direction from the board, they're aware of their budget, they're aware of how and when revenues and expenditures come in and out. We can't see it in real time. And our finance staff has a full workload. And yeah, I think more than that, legislatively, it's the duty of the board. We have no authority to jump into school district operations and tell them what to do or how to do or why to do. It's their expertise, it's their governance, it's their authority.
Mr. Bryson?
Madam Mayor, as much as I appreciate Mr. Watt's explanation about that, I believe we have a $27 million authority of what we tell the school district to do. They don't have their finances in order. How can we in good conscience throw more money at that? And as they're planning future budgets, 3 million short, 2 million short, we would need to see a significant improvement in their budget constraint. They're going to have to bring us a solution. I'll leave it at that, Madam Mayor. Thank you for the time.
Thank you. And I'm going to do a Ms. Hughes Candy's and Ms. Gladysevsky's think outside, talk and think outside question. So if I understand right now, they are in a deficit, either 600,000-ish, and they're operating 63 if you add up everything, but you've said that you really can't look at it that way. But that's fiscal year 22, which is passed. So right now we're in fiscal year 23. They probably didn't start the budget knowing they were in deficit and wiping out all their funds balances. So at this point, since we're all operating on a central treasury, at what point does the city say, we're not going to give you any more money till you show us that you know where you stand? I'm not sure who's going to answer that question, but I think that's kind of what Mr. Bryson was alluding to.
Madam Mayor, I'll just make one note. I mean, as it relates to the current year, by law, you have committed the amount of money to the school district you've committed. That's, I mean, there's a kind of an arcane process back and forth during the budget process where we formally tell the school district the amount of money they get from the city. So that particular ship has sailed. I do think, in any event, these events will invite conversation between the school board and the CBJ assembly. We can figure out as a finance committee if we want to locate those conversations during the budget process in April, or if we want to keep this ball in the air during meetings in January and February. I'm all ears to what the assembly wants, and I'm certainly I have not yet had a request from the school district to come to the assembly or the finance committee and talk about these issues. But I think as they work through this, as they analyze and develop plans for the current year, I think they're going to be eager to engage with the assembly at some point, because ultimately, whatever they do, this problem doesn't go away. I mean, they're going to face the exact same $2 to $3 million problem in FY24, right? So they, whatever solutions they're working on today likely reduce cost in FY23 and in FY24, right? So there will inevitably need to be conversations between the school district and the CBJ assembly. And I would not be surprised that the school district finds ways that may be lawful for the assembly to help more with things like transportation in the interest of trying to spare the education fund. And that has been a tactic we've tried a lot. Sometimes it works, sometimes it doesn't produce what we want it to. So I would anticipate more conversation. And I think I think we're all just waiting on the school district now to come to us either with a request or a discussion or a plan. And if we don't hear anything, we will certainly receive their budget in April, as we always do.
Yeah, hopefully the plan comes first before the request. Mr. Watt, and then I see Ms. Treem's hand up.
Thank you, Mayor. So, I obviously, Assemblymember Bryson has identified a very blunt tool, which I think honestly, the Assembly would be reluctant to use. The community, the Assembly, the school board has always wanted full funding of education, and problems in the audit and problems in budget management aside, I don't think we have a philosophical change in that feeling. I think we want to help the school board and the school administration find a way to better communicate and talk about these issues. I think probably what you as elected officials wouldn't want to have happen is find out from the auditor 5 months after the end of the fiscal year that there's a problem. You would want to hear that sooner. And so I think if there's a way that we can help and encourage the school board and the administration to develop a budget cadence where they're talking about their budget and their expenditures and their revenues in a more timely manner, then they might be they would be better situated to deal with the problems that they face. So that might be some way that we can help them develop a better, I'm going to call it a budget cadence.
Thank you, Ms. Treem, and then Ms. Glaszewski. And then Ms. Hale.
Thank you, Madam Mayor. I appreciate where Mr. Bryson is coming from, and I do think it's our duty this budget season to hold their feet to the fire. But, it is ultimately the school board's job to have oversight over this. But I appreciate the out of the box thinking, Mayor Weldon, that is happening. And I had my hand raised and lowered because I was trying to think of something, and I was thinking, like, what if we just give them money anyway? What's the state gonna do? Could we do that? Because I do think that the school district needs to have some better oversight here of what's happening, but it's obviously not a problem unique to Juneau. I don't think this is something that could be solely attributed to mismanagement or anything like that, because it's happening in every school district in the state. This is a state problem that they are not funding education as they should be. So, like, I'm not an accountant. I don't know if we could do this. Could we give them retroactively $620,000? And what would the state do? Would they take their funding contribution back? Is that a possibility?
Ms. Tarvers, raise your hand to answer that one.
So as Mr. Rogers mentioned, with the foundation formula, the way it works is that if that local contribution, which is the borough appropriation for the operating fund, goes over the maximum amount, it's part of that formula for the next year that you have a reduction then. So it really doesn't benefit in the operating fund. As we've talked about, the other funds outside the operating fund are all outside of that cap. And so if the city wanted to, it could fund outside the cap. But again, if budgetary changes aren't made, I don't know if that really addresses the problem. It addresses the deficit problem, but it doesn't address the problem if spending is going to continue to exceed revenues.
Throwing good money after bad. Ms. Glaszewski and then Ms. Hale.
Yeah, I appreciate all the trying to think out the box. And I agree with Ms. Tarver. There's no way I would be interested in doing that until we settled the process issues, right? I mean, that's the second question, and after you fix all your accounting things. But I thought I understood, and I'm confused again. So this is 620,000 ending July as of last July 1st, right? As of July 1st, 2022.
June 30, 2022.
June 30th, 2022, right? So this whole, what about the black box of this year? Do you know anything about that? I mean, if we haven't been doing, as if the school district hasn't been doing some of the things you mentioned in your paper 159, and they're probably still, or we know they're still not doing it because they haven't done it yet. So presumably the problem is ongoing. you may not, do you know if the school district knows basically how much money it has right now and how much it's spent?
Ms. Tarver, you want to try that one?
I don't know, I can't answer on their behalf. I can tell you as part of our audit process, we do look at subsequent to after year end, before we issue our audit report. We sat down with them and looked at some of their current year information, but it wasn't up to date enough. There's always timing delays in getting information recorded. And they asserted that they felt like that the deficit could be taken care of through budgetary changes, spending changes in fiscal year 23, but I don't see anything concrete that I could answer on.
Okay, thank you.
Ms. Hill.
Oh, thank you, Madam Mayor. I suppose we could have a really big bake sale, community-wide bake sale. Maybe not. It seems, I know we've had this conversation here about the school district meeting with the assembly or coming to the assembly, but aren't we really saying that perhaps the school board, we might want to have a joint school board assembly meeting because it's the board that is elected to provide this oversight. So,
I think that's what they meant.
okay, super. That's really good. I also want to follow or reiterate what Ms. Stream said. It's easy or maybe not easy, but maybe it's too easy to sort of point fingers and cast blame at our school district or the administration or the board. But we have been through a 2-year pandemic that threw everything completely topsy-turvy, and we are at the end of many years of the state not changing or not upgrading the funding formula to the point that it will actually pay for education the way we should in this state. And in communities, we are held hostage by our legislature not doing that job. And I just think that is really important for us to acknowledge. And we see what's happening in Anchorage. It's a terrible situation in Anchorage. So this is, obviously we want our accounting at the school district to be perfect or really good in the way it should be. And we don't want to have these deficits be revealed. But those people are struggling with not enough money. And it's the fact that they don't have enough money is not their fault. The fact that we are in this deficit situation without knowing that might be their fault.
Thank you, Ms. Hale, and you summed it up pretty well. They are probably underfunded, but it's very concerning if you have anything to do with accounting that you don't find the error until the auditor shows up, and to find significant deficiencies is pretty major. We've found some minors in ours, but never any significant
I
that we
agree.
know of, but so,
Thank you. I agree.
so they need to get their monitoring up a little bit more. Ms. Hughes Candies.
Thank you, Madam Mayor. I maybe don't have to say anything now that I don't want us to lose that in threading this needle. And I do think it's important the state not honoring its obligations is not lost. But the words that I see in the cause give me great cause for pause. And these are not good words to be reading. So let's remember both of those.
One last question, and you might answer too. So we've talked enough. Is this urgent? And what happens if there's no action? That's probably the final question that we need to know the answer to. What happens if they don't fix the deficit?
They will have a significant deficiency again next year. And at some to start impacting this city even more so than it is now. At year end, they actually 2.4 million that they owed back to the city through Central Treasury. So while that was primarily related to grants that they hadn't received yet, that is a actual cash amount that had been used by the school district that they essentially borrowed from the city. So it has a direct impact on the city as well.
And how does DEED fit into this? And you want to tell everybody what DEED is, so everybody knows.
Sorry, I use acronyms way too often. DEED is Department of Education and Early Development with the state of Alaska. And so this school district will have to submit their operating fund budget to them for approval. And so we talked a little bit earlier, just that they have to have a balanced budget. And so have to figure out a way to balance the budget for their next budget cycle. Now you said another number.
Ms.
You
Glaszewski.
said another number now, and you made me look at the 2.4 line on the payable to primary government on page 7, right?
I tried not to
You
bring.
did though.
So, but
So
you're correct.
that means that at the end of 22, they used 2.4, if I'm understanding, 2.4 million of money that was in the CBJ Central Treasury, and they hadn't yet paid it back? Is that what that means?
It's a accounting or a financial reporting. So if you have a positive balance in equity and central treasury, which is that top line, it would show, because that's basically the state school district's portion of central treasury. At the balance sheet date, June 30, 22, it's a picture in time. On that date, they had a negative balance in central treasury of 2.4. So they had used 2.4 million of funding that and that often happens with grant funding, I guess, just to make sure you understand, is that, you spend the grants, and a lot of grants are reimbursable. So you have to pay the money up front, and then you get so looking up though, you can see that the receivable net amount in the operating fund was only about 666,000. And so that amount, we did look at, that is one of the things we looked at subsequent to year end, that within the couple months after year end, cash collections had gotten central treasury back to a positive amount. But again, a picture in time on June 30, it was 2.4 million deficit or use of central treasury funds.
Thank you.
Follow up, Ms. Glaszewski again.
No, I'm good. I'm good.
Anything further from the assembly or the staff, Mr. Watt?
Thank you, Mayor. I just want to clarify about the state's responsibility. So I would not characterize it as the state fulfilling their commitments. It's a constitutional duty. So in the state constitution, it is a duty of the state to provide for education for the children in Alaska. It's a duty in the Constitution. And what has happened over the years as legislatures have passed budgets that have limited funding. And there's been an atrophying of funding to school districts across the state. And I think what has happened is school boards have been faced with devil's choices. Not enough money to go around. Do you want more teachers or do you want more administration? And they choose teachers, which I think makes sense. They're in the business of education and they're funding classroom education. So I know the district administration, like us, face staffing shortages. But on the CBJ side, we start with a much deeper bench. We have conversations with the assembly about the necessary administrative effort it takes to run programs. And I know that the school budget is very light on the administrative side. And in times right now where staffing is very difficult, it hits them that much harder. As a long-term goal or project, I think at some point there will be litigation brought against the state by a municipality or school district about their failure to fund education, particularly in the funding of school facilities. So school district has a problem, they have to fix it. But I think it is also okay to express some sympathy to their situation.
All right, anything further, Ms. Starver?
No, thank you. I appreciate everyone's understanding as we go through numbers. I know they're not always easy to understand and we're available. I'm available throughout the year. If questions do come up, feel free to reach out to me.
Yeah, she is our auditor. All right, with that, it sounds like kind of what Mr. Watt says. We feel sympathy, but the school district has some work to do. So with that, we will go into our, thank you, Ms. Tarver. Appreciate your time tonight.
Thank you for your patience with stupid questions.
With that, we will go update on our finances.
Madam Mayor, do you want a break?
No, because Ms. Treem is trying to catch a plane and so we
Okay.
need to just keep going. So update on fiscal year 22, 23, and 24. Mr. Rogers, or is it Ms. Beagle?
I'm gonna lead off, Madam Mayor, but we'll just get us to the right place in the packet. I think if we all start on packet page 22, it'll be the right. Oh, it'll be the right starting place. Okay, so this is a document, hopefully in a format that is becoming familiar and easily followed. This is the budget summary, starting with FY 22. I won't belabor what we did in the budget creation process, which is what you see. So just to give you a sense of this document again, so everything that goes into the creation of the manager's proposed budget gets rolled up into the blue line. This is on this page, we're looking at FY 22. And then what you see between the blue line and the assembly adopted budget, the green line, those are all the changes that the assembly made during the budget process. And then for FY 22 last year, you see all of the changes that the assembly made after the budget process, meaning supplemental appropriations, as well as changes to revenue and expenditure. In this mostly changes in revenue and expenditure that the assembly had nothing to do with. So these are when we look at this group here, this grouping supplemental appropriations for 22, those are actions that the assembly took. And then the line below that, the anticipated variances. In this case, these are actual variances, not anticipated. You do see the personal service lapse. You see the lapse GX transfer. We've had some discussion about.
Before you
that.
go on too much further, could you talk a little bit about the personnel services lapse? Was that, we just couldn't fill positions or what was that all about?
Yep, that's exactly right, Madam Mayor. I mean, we continue to face staffing shortages. I mean, we have not in recent years, prior to the pandemic, we did not have lapses of this magnitude. We had lapses that might have been in the millions, 1, 2, maybe even $3 million on the outside. But what we see as an almost $4 million personnel services lapse, I would presume is unprecedented in CBJ's history. And it really has everything to do with staffing. I mean, versus the manager never sent out an email to all the directors that said freeze hiring. I mean, that never happened. We produced that lapse because we cannot keep all of our budgeted positions full.
And typically that's more about a 500,000 to $1 million, correct?
It has ranged. It has been higher than that in recent years. Certainly since the pandemic, we've seen numbers bigger than that.
All right, thank you.
Same thing. So the general fund transfer, the lapse, the general fund transfer to debt service. We've talked about this. It's a little bit complicated, but this general fund transfer would have kept the debt service fund whole. Instead, we allowed the debt service fund to go negative, knowing that there would be sufficient property tax at current mill rates to get the to get the debt service mill rate, to get the debt service fund positive again in this year. I mean, interesting to have a conversation about the school district going negative with their fund balance. To me, during the pandemic, we had a number of funds do that. We always knew next year we would catch them up, and that was the goal. So in this case, you saved general funds because you allowed the debt service fund to go negative in 22 and to be replenished in 23. So you saved several $1 million there. The non-personnel lapse, that's services and commodities. That's not a hiring issue. That's an issue of us not being able to execute contracts that we had intended, or not purchasing services and other service and commodities that we had intended. In some rare cases, it may mean that we just got prices on things, or it may, I think in other circumstances, I think it's always been smart for the manager to point to these numbers and say, this really does demonstrate CBJ employees on their, day to day, doing their best not to overspend and to make good decisions with public money. You can see a $12 million number there. That's ARPA money replacing state marine passenger fees. That was a big part of the additional funds in 22. And then another, the local government loss revenue grant, $9.3 million. That's more than $20 million of government money related to the pandemic that came to CBJ into the general fund. This was all known last year as we worked on the budget, just never got, we didn't appropriate it, or it didn't get rolled up into the budget. These things happened afterwards. Sales tax revenue came in significantly above forecast. We're going to look at the sales tax forecast when we get to FY23, but sales tax revenue was significantly over forecast in 22. Another our ARPA award above its original estimates, just on separate lines here so we can keep straight. Department revenue changes above or below estimates, minor changes there. And then obviously a very significant reduction in investment revenue. I make a note in the memo that the midterm investment portfolio for the general fund had an actual $3.6 million loss, but that was the net difference from what should have been a gain of $1.7 million. So there's a net $5.3 million loss, not loss, but net difference from the budget. And then you'll see $3.9 million. Those are ARPA funds that we actually received in 23. They are actually part of the money you're seeing above, but we did as a result of a time reference of a receipt, they're shifted to FY23. You'll see that same number down below in the FY23 budget summary.
Madam Mayor.
Ms. Hill.
Thank you. Just to clarify this for me, because you're speaking quickly, the investment income reduction, you're saying there's a $5 million reduction in the investment income. It was reduced from what we expected.
Correct.
So it's not like we had to pay them money. It's just that we made less money.
Assemblymember Hale, it's correct that we did not pay them money. It's that the value of our existing portfolio went down.
Okay.
And when the value of our existing portfolio goes down, GASB rules under a concept called mark to market require us to write down our current assets at their current value.
So we just can't spend as much money if it goes
Correct.
down.
Exactly.
Okay.
I mean, mark to market can be a complicated concept, but the reality is our portfolio loses value. There are other people in the world who would say, no, your portfolio at all, except on paper. And to some degree that's true, but mark to market and GASB requires that we write down those assets, the value of those assets on our books.
Okay. Thank you. That's perfect.
Ms. Glaszewski.
Since we're stopped, I have a question. I can't get past this. In FY21, the blue and the green lines. I didn't think this ever happened. The manager proposed a $160 million budget and the assembly adopted a $152 million budget. Is that what that says? It doesn't happen. That we always add money, don't subtract money.
Deputy Mayor Glaszewski, I'd have to look back and understand why that happened. Obviously, we have that detail. I just don't.
Okay,
have it.
I couldn't, I was like, well, I don't know. Okay, thank you.
Yeah, those are the 20s.
I know, but I was like, that doesn't ever happen.
So the last two lines on here, this was a reversal of state marine passenger fees from ARPA funds. This was a complicated situation. We told you during the budget year that we were taking state marine passenger fees from the state that they granted to us that replaced state marine passenger fees we would not have otherwise received, pulled them all into the general fund. In actuality, what happened is that we got a portion of that money, we took it into the general fund, but there was a portion of that money that actually related to real passengers. And so the portion of that money that related, because it was a hold harmless provision, the portion that actually related to real passengers, we can't just take into the general fund. That portion that relates to real passengers is in the state marine passenger fee fund. So that was a correction. And then the $540,000 negative amount that's been known. This is the budget adopted a really long time ago, where the assembly made a decision to reduce the mill rate by 0.1 on the same day that you adopted the budget. So that the impact of that change was not reflected on the budget that you passed that day. It gets reflected subsequently. So no big deal. But the net changes that you see here in the budget get us to an $18 million deficit in the FY 22 fiscal year versus what we thought would be a $5.4 million deficit in the budget. I will say this, I mean, FY 22 was a very extraordinary year. I mean, it probably in the long scope of the budget, it will look like the most extraordinary year in a very, very long time. Just a massive amount of federal money came to the city. A lot of that money, unlike the prior year where we had a lot of federal money that we mostly dispersed, we had a lot of federal money that came into the general fund. You made, you made strategic investments, I think. I think we were sitting down, you were sitting down as a body, knowing that you had this big fund balance, including the reimbursement of prior reimbursed school bond debt reimbursement that we didn't get till 23, but you knew it was coming in 20. So it is not terribly surprising in that year that we had such what looks like such a staggering deficit because you were spending money that you knew was coming in the future year. So in 22, that final general fund, unrestricted general fund balance drops all the way to $8.7 million, which seems like quite a low number, but you did a lot of spending knowing that money for school bond debt reimbursement was coming in. So I think the timing difference makes the story look a little different than it really was.
Yeah, and the spending was a lot on infrastructure.
Yep.
Ms. Hale.
Thank you, Madam Mayor. I really appreciate your adding that footnote. And I'm sure all of us will recall that we made these expenditures, all of those numbers in parentheses, late in the fiscal year. And we also had a list that Mr. Manager provided to help us choose. These are some good things to be spending this money on, and I appreciate that. But I do feel, and I will just hold up this chart that has this dramatic red bar beneath it. And I love this chart, but it almost seems like that dramatic red bar on this chart could use a little asterisk that explains it so that 10 or 20 years in the future, assemblies don't think, whoa, those guys were a bunch of nuts, all this deficit spending. So thank you for allowing me to editorialize.
Yes. Thank you, Ms. Hale. That was perfect. That's what we're all trying to say. We spent the money, but we spent it purposefully. Anyway, continue. FY 20, any questions on FY 22? Let's start with that. All righty, and we ended up with an 8.7. General fund, remember that doesn't include our budget reserve. So FY 23, no further questions.
Okay, thank you, Madam Mayor. So let's start looking at FY 23. This is the current year. This document works just exactly the same way. It walks you through the creation of the manager's budget for FY 23, and then up to the blue, and then between the blue and the green, the changes that were made by the assembly. So the assembly adopted budget would have anticipated a deficit of $6 million. With full knowledge, of course, that that $16 million was actually going to come in FY 23. So nobody really anticipated, of course, that fund balance would drop all the way to $2.7 million. But you now can scroll forward from the green to this peach bar here, from the adopted budget to what we now project as the final year end, and you just see the changes that have occurred this year. One thing that I think is notable, and I've commented on it in the memo on this subject, is that the Assembly has done very little supplemental spending this year, less than any year that I think I've been the finance director here at CBJ. The only spending we see here was $100,000 for Telephone Hill development, $40,000 for a survey on sales tax on food, and $15,000 for medical respite. Those are all one-time expenditures. They're all exceedingly de minimis in the size of our budget. So really, we see almost no supplemental spending by the Assembly or proposed by the manager in FY 22, but for the wage and health benefit supplemental that you adopted tonight. So that is now no longer pending. You've adopted that. And that was really mostly inked when the assembly ratified agreements that were negotiated between the administration and the bargaining units, and then extended those same benefits to non-reps.
Ms. Dream? You're muted still.
Sorry, everybody who's sitting around me will get to hear that question twice. I am confused. Mr. Rogers said almost no supplemental spending in FY22, but isn't that what didn't we just go over FY22 with the very long list of supplemental spending?
He meant 23 if he said
Okay.
22.
Okay, well then my comment was gonna be, we're not even halfway through the year, so we'll see what that number does before June 30.
We're going to maintain discipline, Ms. Dream.
Yes, thank you. Assemblymember Treem is correct. Chair Treem is correct. We I meant 23, not 22. So then you see again under this subsection here for anticipated variances, $16 million in state reimbursement of previously unreimbursed school bond debt. ARPA funds, that $3.9 million got shifted from 22 to 23. I'm going to skip sales tax for a second. An unanticipated award. This CRISA was I believe the second round of federal pandemic funding. So there's still transit money coming out of that. It was $1 million that was not in the budget. That's the community assistance program, what we used to call revenue sharing, was above estimates. The legislature put more into that program. There's a formula by which it gets divvied out to eligible municipalities. We got more than we had expected, which was good, and credit to the legislature for plussing up community assistance. And then a small correction there for property tax roll, just gets trued up, and all kinds of things change in the property tax roll from our estimates, but we were very close. And there's just a lump in there as an anticipated lapse of $2 million on the expenditure side. Obviously, that number could be considerably higher in the current year. We continue to face staffing challenges that are very significant in the current year. I will now take us to the end of the packet. Well, not the end of the packet, just a few pages down. I think this is page.
Before you go any further, any
26.
questions?
I'm essentially staying where we were, but I want to talk about sales tax. So on that last document, you saw that sales tax is now forecast to be $7 million over budget. Let me just talk through that a little bit. We've looked at this document before. It's been in the
Which page is this?
26.
26?
26. Thank
Okay,
you.
thank you.
We've looked at this document before. It has stayed in the same format, but I look at it a lot, and I know you don't. It takes a minute to get your head wrapped around it. So what you're seeing is each of these columns represents a quarter of the year, 3 months at a time. And then this last column is remote sales tax. And you're seeing it FY16 through FY21. Those are just the actuals. And then you see several different rows for FY22, 23, and 24. So what you see for FY22 is a row for the budgeted sales tax. That's the amount that was in the budget that you adopted for FY22. Then you see a 22 projected, a 22 actuals, and you can see how different we were. And when I went through the FY22 summary, I noted that we had $3.2 million of sales tax above. No, I'm sorry. That is, that's not correct. That number is the difference between projected and actuals. The number you'll see in here is the difference between budget and actuals. I'm sorry that's not subtracting the same lines, but the math in both places is correct if you were to look at it. Not to belabor FY22. So really the news tonight, I think the headline is this number right here. The Q1, that's July to September sales tax, was $20.2 million. And that's exclusive of remote sales tax. And remote sales tax is not included in that. And you can just compare that number back. So $22.2 million of sales tax in that quarter compares to $13.1 million of sales tax in that same quarter last year. And you can go back to the depths of the pandemic, $9.5 million of sales tax in that quarter. And you can go back to our previous peak pre-pandemic, $17.1 million of sales tax in that quarter. So I had budgeted I remember I called it a supersized budget and of $17.9 million in this quarter, and it actually came in at 20.2. So apologize. $2.25 million of sales tax above budget in one quarter. Of course, it's funny, just like in the real world, when I get numbers like this, when I start seeing them come from Treasury, of course, the first thing I always ask is it possible that's a mistake? And we do a lot of work in the background to make sure it's not a mistake. And eventually we get to deciding it's not a mistake. It's a lot of sales tax. It's always wise to remember that it could be an anomaly. It could just not, it could be something that's not correct. I mean, or it could not be indicative of a trend. In this case, if you look back to the April to June number, the actual at 15.1, $1 million over, $2 million over what was budgeted that year, $1 million over what I had projected in the middle of last cycle. And a big number last January to March, $11.2 million, way higher than we've ever seen before in these quarters. I'm more inclined to think that the July to September sales tax order number is much more of a trend than it is an anomaly. As a result, we have adjusted the Q2, Q3, and Q4 sales tax forecast. So what you see on this line is an actual number for the first quarter, and then fresh projections, new projections for quarters 2, 3, and 4. Those are not actuals, as well as a new projection for remote sales tax.
Can you stop for just a second? Ms.
Yep.
Tree?
Thank you, Madam Mayor. So if we're assuming that some part of that is because of inflation, if I hear that that's our revenue is increasing because of inflation, I'm assuming our expenses are also increasing because of inflation. And given the conversation we just had about the school district, how are we doing on our, year-to-date budget versus actuals?
Yeah, thank you. That's a totally appropriate question. We don't look a lot at our year-to-date actuals in the general fund budget until we get around to creating the FY24 budget. So we just don't quite know yet where we're going to wind up. What we do know is that we have, I think, safe to say, unprecedented levels of staff vacancy. I mean, I can tell you the finance department has had unprecedented levels of staff vacancy in this year. I mean, the finance department's not that big. And I think that my lapse in the finance department this year for personal service could exceed $500,000 on my own. Not a very big department. So there will be a really significant lapse for personal services. However, Chair Treem's point is still correct. In the non-personnel categories, I think we will see significant cost overruns in all kinds of places, particularly fuel. Fuel continues to drive inflation, both nationally and certainly locally, and anything where the bulk of what we pay is freight. So freight is exceedingly expensive. It's obviously levered to fuel. The manager and I were talking yesterday. It's interesting because we pay, certain things we buy, we're mostly paying for freight, right? I mean, if we buy road salt, the vast majority of our cost is freight. I mean, salt is not expensive, but freight is. So we will see many commodities that we buy escalate significantly as a result of freight costs. Just this week, the Assembly Public Works and Facilities Committee heard Mr. Scanlon come forward with moving some money around in order to pay for extraordinary shipping costs for the gondola that were not anticipated. We are going to see that everywhere. And I think we'll see it mostly in fuel and freight. We will see some service contracts escalate, et cetera. I don't have any reason to believe that the additional costs that we're going to pay for non-personnel will even touch what will be an unprecedented lapse for personnel costs, if that makes sense.
So that was a good point by Ms. Tree. Ms. Gladysevsky, and then I have a question.
Question about, since we're talking about sales tax, where are we with the sales tax voter survey issue?
Thank you. I just picked that back up this week. We had been waiting until after the election. We've just been busy with other things, but it is now an active ball in the finance department's court again.
Thanks.
So my question is, I appreciate the fact that we have an extra 2.25 million in sales tax for Q1, but some of that can be attributed to inflation, like you said, and we hope that that was the peak and now it's slightly going down. But how much can be attributed to Iron Man, or that people are anticipating a big PFD, so they were doing some spendings? And I think both of our native corporations had some pretty good dividends, so how comfortable you are projecting your future quarters a little bit higher, knowing all those things were happening?
Yep. Thank you, Madam Mayor. I think that's exactly right. There was a lot of spending activity in the first quarter of the year. We know that. Obviously, all the things that you pointed to, including dividend spending, which we normally historically have thought would happen in quarter two. There was a lot of talk about a big dividend. It did come a little early. We think some of that spending really did probably happen in the first quarter. I can tell you that even for the numbers that I have reforecast here, 12.2, 10.8, 16 million, I have discounted those even from what just kind of the math might tell me. Because one of the things that I do here mathematically, which you don't see, is I look at the historic trend of what does the first quarter tell us about the next quarters proportionally. I do that same math in this year, but I've discounted it by 10 to 15%. So we continue to think, I mean, it's interesting. So for example, that proportional math gets me to an interesting thing that Ms. Spiegel took issue with smartly, which is I've projected $10.8 million of sales tax in the third quarter. Well, that would actually be $400,000 less sales tax than we received that same quarter last year. And that's really just what the math leads me to. And I'm inclined to think that that quarter, that January to March quarter, if you look at the history there, that quarter feels to me a little bit anomalous and not so much trend, but some kind of noise. So, you know, the forecast is certainly not perfect. I don't know that I would encourage anybody to run out and spend the $7 million, but I think the finance department has been making an effort to kind of try to get real honest about sales tax. And we, you know, to some degree, the numbers don't lie. It's possible that we will get another quarter or two and we will be looking back and thinking that, you know, that July to September did not represent a trend. And when we get that information, we'll correct this and we'll make new adjustments. Obviously, when we introduce the budget in April, we'll have the October to December quarter. If it's something more like 12.2, I'm going to think that the trend is real. And if it's something less than that, we may want to back off a little bit. We will continue to adjust this as we get closer to the budget process. But for right now, I feel quite confident saying that we're going to take in a lot more sales tax than 55.7. And I think it'll certainly be well over 60 million.
We appreciate your constant vigil on quarter by quarter after our previous discussion. Any other further questions? Okay, carry on.
Okay, so let's roll back up to the budget summary and we'll just finish the conversation about 23. I should probably just pause and let's see if there are other questions about 23. We now do project, just to maybe come back to the graph. You know, the big graph now does look like this, and we now do presume to have something on the order of a $20 million surplus in FY23. That would obviously be reduced if the assembly were to make supplemental appropriations in this year. That already does include the wage and benefit supplemental that you approved tonight, so that's already netted out of there. If we had a $21 million surplus in this year, our year-end fund balance would start to tip over $30 million. Unrestricted fund balance would tip over $30 million. So I think bigger conversations to have about fund balance, but that's where we wind up at the end of 23 based on everything that I know today.
All right, Mr. Bryce and then Ms. Hale.
Thank you, Madam Mayor. With inflation obviously impacting everything, have we made an adjustment to the restricted budget reserve? Because that is, I think by charter, we're required to have a specified amount of time, and I forget what it is, 2 months or 3 months. Have we made efforts to increase the restricted budget reserve?
Thank you, Mr. Bryson. We haven't yet, but I think it's a subject that's on my mind a lot. I know it's on the Assembly Finance Committee's mind. I made a note in the memo on FY24 that I do think part of the FY24 budget process should be the manager and the assembly committing an additional amount from unrestricted fund balance to the restricted budget reserve. The manager's not agreed to this yet, but I think there's a possibility that we adopt a model where staff, meaning the manager in the budget proposal every year, proposes to transfer enough money from unrestricted fund balance to the restricted reserve to keep it at that 2 months level. And if the assembly doesn't want to do that, we don't have to. You could reject that. But I think it might become a normal part of CBJ business for the manager in the manager's budget to propose that transfer every year. And the assembly can say, no, you could make a strategic decision not to do that for whatever reason. But I think that that's one way we can attack that. Alternatively, there is, I know from the math that the restricted budget reserve today is at least $5 million less than it would be using the same logic. If the assembly didn't want to bite that off all in one chunk, you could say, we'll bite it off in smaller chunks and get up to that 2 months level. There is money that comes into the restricted budget reserve from the 1% sales tax that was approved. However, that amount of money over 5 years may just be enough to keep pace. So that $5 million that we sort of owe to the restricted budget reserve may be something you reserve in your minds from unrestricted fund balance.
Thank you, Mr. Rogers. Ms.
And
Ham-
I'm sorry,
sorry.
just one comment on that. I think I think this is an opportunity to say, in times of fat, it makes sense to put money away, right? I mean, if this is a time where our revenues are growing very fast, we've recently had this money, maybe our costs are temporarily diminished because of staffing issues. This is an excellent time to say, let's move more money into the restricted budget reserve so that a future assembly with less unrestricted fund balance isn't forced to make some Sophie's choice in order to do that.
Yeah, and I believe COVID taught us that very well. We survived because we had a good fund balance. Ms. Hill.
Thank you, Madam Mayor. Mr. Rogers, I do not believe that restricted budget reserve is required by charter, but rather by resolution, and it's not even required. It's just a resolution that we agree to follow. Is that correct?
That's correct.
And I see Mr. Palmer nodding his head, and I just think that's important for us to remember. Can you give us an idea of what that restricted fund balance is now?
It is on this chart. And it's listed on the second line, and it says by the end of FY23, $16.6 million.
Thank you.
That presumes, I will say, that JEDC returns all the funds that we loaned to them that they loaned out in this fiscal year. That will not likely happen. So we will need to make some decisions. It's possible at some point that what will happen is that we will have loaned $3 million to JEDC to loan out as emergency loan program. At some point, JEDC will come back to us and say, there's a portion of these loans that have simply defaulted. We will take back whatever remaining amount of money JEDC has. We will probably take back the responsibility for attempting to collect those amounts. JEDC will no longer be in the picture, but there could be an amount that we simply have to write off that would presumably just be replenished from unrestricted general funds into the restricted budget reserve.
Super, thanks.
Ms. Glaszewski.
Since you brought it up, what is the number, what is the 2-month number roughly?
I have it if you just give me 1 second. I think importantly, this is a subject I think maybe I'll put on an agenda for January or February. We can just locate a little conversation on it. We base the 2-month, the resolution tells us to base that 2-month number on projected general government revenues. And that is GFOA's best practice. The projected revenue have in this spreadsheet, which I think are correct, were almost $127 million in the general fund. That's all sources. That's not just tax revenue, but $127 million. The restricted budget reserve amount at $127 million is about $21.2 million. So that would be the balance that we're shooting against. I will get this table of information updated and we can have a discussion about how much money should move into the restricted budget reserve.
That's good. I just.
Mr. Watt wants his 2 cents on this.
Thank you, Mayor. I just want to remind you that we did put it in the 1% sales tax, so there is money coming there.
All right, so we're moving to FY 24.
Okay, FY 24 is a little bit less based on the budget summary, more so than it is just trying to gather together some amount of musing into this somewhat longer memo. But for now, let's look at the budget summary briefly. Again, the format is the same. Wow, we really cleared out the room. Nobody wanted to stay for this. Okay.
It's way too in the future.
So we start looking at the FY 24 budget using the exact same structure. We get down to the blue line, which will be the manager's proposed budget. We start with the prior year adopted budget, and we remove one-time revenues and one-time expenditures from there. We removed FY 23 one-time expenditures of $1 million. Sales tax growth over the FY 23 adopted budget, that 9.3 number won't align to anything on your sales tax for the simple reason that it's the FY 24 budgeted amount to the now FY 23 FY 2023 budgeted amount. So, but $9.3 million year to year, our budget to new budget of growth in sales tax. Property tax growth over FY 23, that's just projected at 2.5%. I don't have any idea what that number is. As somebody in the community who myself is trying to buy a house, I can tell you, houses continue to be fairly expensive. We do see some softening in the residential home market for sure. High interest rates have caused houses to be on the market longer, a little less price competition. So I think probably in the latter half of the year, we may see some residential sales that are soft, but certainly residential sales in the first half of the year were blazing hot in comparison to the prior year. So we will see strong property value growth. And then other revenue growth, again, just a 2.5% number on all of our other revenues. That represents new grants and excise taxes that come into the general fund, just everything else we can imagine. We do forecast some amount of revenue growth. That gets us to an adjusted base budget that would start at about a $6 million surplus before any change. The FY 24, we know that there will be tobacco tax for MIH coming into the FY 24 budget above and beyond the FY 23 budget. Wage and benefit costs, that $1.4 million, that is the 2% wage and benefit plus 5% for healthcare, or actually at 5% might be a little bit different. About $800,000 of merit increases. So obviously, irrespective of wage and benefit increases, employees do get merit increases each year or every other year, depending on where they are. And commodities and services growth, we've just said 2.5%. Obviously, I would expect that number will be higher than that, just to account for the impact of inflation, depending on the cost of fuel. So based on just a few kind of random-ish, or not random-ish, but mean guesses about what it looks like to just keep doing business in the future year, you'll be looking at a surplus. If sales tax projections hold up, if we continue to think that this is a trend and not noise, we will start with a surplus. And when I say me, the manager will start with a surplus. And I would expect that the budget that the manager gives you will reflect a surplus unless we see something change on the revenue front. Obviously.
Stand by one, Ms. Treem.
Thank you, Madam Mayor. Mr. Rogers, does the one-time expenditures line, is that the assembly grants, like the things that we've decided one-off projects, like the long list from FY 22? Is that what that line is?
Yeah, thank you, Chair. That's exactly a good question. We could pull up a list of what all of those individual one-time items are. It tends to be things you do on the pending list when you say, I want to do this one time rather than recurring. There's other things that wind up both in the manager's budget that are one time rather than recurring. Ms. Beagle's
Okay.
giving me a lifeline if you really want to know what they are.
No, I not specifically, just as a category, when the assembly chooses to spend, I can't remember the things on that list, that you showed us at the beginning from FY 22. When we choose to do that, is that where it's showing up? You're taking them out. Am I reading that right?
Yes, with one little caveat. So it is a chunk of this is increases to operating grants that were one time. But a chunk of this is also the Assembly's additions to the CIP last year. which totaled $375,000. So that's a portion of this that's not grants. It was the assembly putting forward CIP projects that we added to the CIP that gets reflected here because it was in the prior budget. But we don't expect, the manager won't do that again. You may add those things again, but we presume that the manager's CIP would be consistent from year to year.
Okay, I guess, if I may, a comment on that. I mean, we're always gonna do that. It seems like it would be wise to plan for it. You know, we're never not gonna give those one-off things, even if they're for different one-offs. So, maybe there's a reason why you're doing this that I don't understand. And also, I'll probably have to drop off soon.
All right, thank you. And then looking at our balance on page 25, Mr. Rogers, you want to point out the last little rectangle that's the wrong.
Yes, thank you, Madam Mayor. So if you're just looking at this fund balance chart, the very last little rectangle going up should be green, not red. That's just a mistake on my part. Yeah, green goes up, red goes down. We've all learned.
I read it as green.
So Ms. Gladysevsky is colorblind.
No, I'm not going well. I just.
You were just pointing out that it was different. All right, what else? What do you have further for us, Mr. Rogers?
I think I was just looking at the memo that I had prepared for you. I'm sure you've all read this. I don't know that there's anything here I really haven't covered that.
You haven't
matters.
talked about remote sales tax. The last page.
Yeah, let's do that. I skipped over that when we talked about sales tax, but I think it is probably worthy to just give you a little real quick update on remote sales tax. Remote sales tax continues to grow apace. And some of that continues to just be people shifting more and more of their buying online, which is the reason to have a remote sales tax. So it continues to pay for city services and gives local businesses equal footing as they try to court customers. But we also continue to register sellers. So I get a regular update from the Sales Tax Commission about new sellers that we register. I make a note in the memo that we have not yet registered Google. Google's a massive company. There's a lot of spending via Google on advertising coming from the local community. The commission believes that once we successfully register Google and they're collecting and remitting sales tax, it will materially move the numbers on its own. We don't have any businesses that scale anymore, but for Google. So I think what's really interesting, we don't report any revenue amounts by month because we don't actually record them that way, but we do get remote sales tax by month. So it's very interesting. We report this sales tax to you by month in the month that the spending happened. 2 months later, we actually get the money. But so you can really see just strong, consistent growth month to month where we tipped over well over $300,000 of remote sales tax in the month of September. Again, I have these red numbers are just my forecast of a trend forward. So I don't know that we're going to see $325,000 of sales tax every month from remote sales tax, but I think by the end of the year, on average, we will be cresting over 300,000 a month. It gets us to a full year projection for 23 of 3.5 million. And I'm rather confident and bullish on the continued growth of remote sales tax into the year. And I project us to be over 4 million in FY24. And I have significant confidence about that.
Do we collect sales tax from Alaska Airlines? Because maybe that's why the September was so big.
Interestingly enough, Mayor, we don't. Airlines are a federal sales tax exemption. It's not state, not local. We cannot tax airfare, both Alaska Airlines and all the small air carriers here in Juneau. So you will never pay sales tax in any jurisdiction on an airline ticket.
Ms. Glashow,
What's the issue with Google? Can't find a person still, or they're not
yeah,
taking your
interestingly enough, I was
calls?
having a conversation, this exact conversation with Mr. Palmer. Obviously, there's no phone number for Google. You don't pick up the phone and somebody answers Google and you say, oh, I want to talk about you sales tax and you get to somebody. It's quite frustrating to work through a process with one of the biggest corporations in the world. The lever that the commission has under the law is the exact same thing that we do locally. If we have a business in Juneau that has not filed to collect sales taxes locally, what we will eventually do after repeated attempts to contact them and encourage them to start collecting and filing them, we use a force filing process. So we eventually just say, we are force filing. You are allowed to do this under the law. We say, we believe that we have reason to estimate that your sales are X and the induced sales tax is Y. And you now owe us that induced sales tax. And eventually, even with that force filing, it gives us something where we have a legal claim that we can press our case in the courts.
So you just said this, we talked about this very thing like 6 months ago, and you said the
Yep.
exact same thing. So no progress, nobody's sending them lots of letters,
Uh,
lawyers sending them letters.
Definitely lots of letters, but my understanding is the commission has now force filed Google, which creates the avenue through which we can now pursue them through the courts. Mr. Palmer's indicated to me that with a lot of these big corporations, until you sue them and a judge finds them in contempt for not showing up to a hearing, you just basically get no response at all. So I think that we're some part of the process. We will eventually register Google. Google's only alternative would be to sue us and say that we don't have jurisdiction. The commission's kind of been waiting for a company to do that. It hasn't happened, I think, because most companies have realized that we do have appropriate legal jurisdiction to collect remote sales taxes in the state.
Do you get back money from them?
From the point that we force file them, yes.
So
Yep.
not before that.
Yeah, and I am not familiar with how far back the commission force filed them.
Start that clock.
All right, we have lost Ms. Treem because she's probably heading for a plane. What else do you have for us, Mr. Rogers?
Thank you, Madam Mayor. I don't know that I have anything. I think today was really an effort to give the assembly as much information as we could and allow you to ask questions. And really, we're leading up to the retreat. We've had some conversations recently about the kinds of discussions you'll want to have at the retreat, but I hope that that today's discussion gets everybody thinking about how you want to ultimately here, the thing you have to do is direct the manager about how to create an FY24 budget. Additionally, because you have such a substantial fund balance projected at the end of the year, I would imagine that your conversations at the retreat will beget potentially some amount of supplemental appropriations. You will start taking some of that fund balance and investing it in one thing or another, or whatever the strategic direction is.
Thank you. This body loves to direct the city manager, and I know Ms. Hale is dying to have the budget reserve question. Discussion, I should
Thank
say.
you, and I'll leave it at that.
Yeah, Mr. Bryson, sorry.
Thank you, Madam Mayor. I actually just wanted to say thank you to both of you gentlemen, Mr. Watt, Mr. Rogers. Every time you go over the budget with us, I feel confident. I understand exactly where the numbers are coming from. I don't feel like there's any uncertainty or guess. You have the thorough explanation behind every question about every number that you put on the board. And for us to be able to go through our budget with a lot less heartache than other entities, I just can't thank you enough for the tight control that you have over this with the heavy responsibility that it is. So thank you to both of you gentlemen for this.
Yes, we sleep well because you have sleepless nights.
And Madam Mayor, if you just might indulge me for a second, there is nothing in this packet that gets created by me or Mr. Watt alone. Importantly, Ms. Spiegel is now in your second-ish plus year. And she has become exceptionally important to CBJ's budget framework. I mean, everything that gets touched in these numbers is Adrian's work. And I would be remiss not to recognize her truly significant contribution to this. I mean, we have, I think, brought a lot of order to how we manage our own mid-year review of the budget. And a lot of that's due to Ms. Spiegel.
I'll throw a thank you to Ms. Spiegel as well. Thank you, ma'am.
Thank you, Ms. Spiegel. Mr. Watt.
Just a couple of things. So one, little bit of budget humor. A reporter that's no longer in Juneau asked Mr. Bartholomew one day, has the manager given you the manager's budget yet? Right, which is actually quite funny.
Yeah,
Um,
that's how it works.
the second thing, when we were talking earlier about the school district, I was talking about the budget cadence, right? That's what we have here is we have finance meetings every month, every quarter, we report out on sales tax. We have a system. And I think that's where we can encourage and help the school district to have a budget cadence and a calendar where they're regularly talking about revenue. I think they're by and large, they're policy driven, right? They're working on education and they're working on policy issues. And I think, you know, that our system is totally different and we have different problems and different constraints. But what we can rely on is we have good code. We have the charter. We have adequate staffing of administration. And we have budget culture that's jointly staffed in the assembly. So, you know, one of the things that in the charter, and I'll just read this to you. If during the fiscal year it appears that revenues available will be insufficient to meet the amount appropriated, the manager shall report to the assembly without delay. Right? That's the kind of the charter and the code that drives all this. And then, you know, we work really hard to hire the best people and you know, train the best people up and you know, work on keeping them within the system. Later on, I think in January, we're going to start to talk about recruitment and retention. I'm one of your dinosaurs that, you know, I've been with the city for a long time and it's been great for me, but it's also great to have institutional memory. And I think one of our fears is with employees that don't have the retirement incentive to stay for the long haul, we're going to start to lose some of that. So just a couple of thoughts on the budget and budget continuity and how important that is. And the last thing I want to say is the assembly spends a lot of time on the budget, which is great. Your budget fluency is tremendous.
Since you like to rock climb, you must be a pterodactyl. Anything further? Mr. Palmer, you sat quietly all evening. Do you have anything to add? He's shaking his head no. Well, Hog Doc, before you leave us, do you have anything? All right, with that, Finance Committee is almost adjourned. January 4th is the next budget. And remember, we're going to talk about this at our assembly, so don't lose all these numbers. We're adjourned.
I will lose them.